Right, hello and welcome to Camel Finance. I'm your boy Camel, and I told you yesterday, right? I told you so. Purple tie means we pump. I told you when he wears a purple tie, it means we pump. And guys, I was not joking, okay? I wasn't joking. So yeah, write it down, make a mental note of it, do whatever you got to do, and of course, hit that subscribe button because where else are you going to get alpha such as this? I wanted to make a quick note about comments. If you write a comment to me, it is very, very easy for me to find it and reply to it. However, it's becoming increasingly difficult for me to find responses to replies. So if you write a comment and I reply and then you reply to that reply, it's becoming increasingly difficult for me to find it. So I would just ask that if you've got something that's important and you want me to comment on, please do write it as a standalone comment. It makes it so much easier for me to find. So if you do that, I'll be able to get to it and I'll be happy to do my best to respond. Also for chart requests, I've had a few chart requests. We're going to go through those. If I say to you, I will cover your chart, okay, and then I forget, please don't take it personally. Please don't think that I did that on purpose. If I don't want to cover your chart, if you request an altcoin, I'll just say no, I don't want to cover it, okay? So if I tell you I will cover it and then I forget, please just ask me, okay? Just remind me the following day. Just say, hey, Camel, you forgot to cover copper, and I'll cover copper for you. So we're going to handle a quick few of these, and then we're going to hop into today. Here's copper. It seems to me that we've got at the hard right edge, breakout, retest, resumption, looking for that resumption above the high cluster. If we can get above there, then it should be party time for copper. Also, we've got our bottom trendline support that we can hold. Although while we're above that, then it's okay to remain in longs, in my humble opinion. I'm going to make you wait until the weekend to cover silver, and we'll do that in great detail at the deep dive tomorrow. Here's lithium. I honestly don't know what to do with that, okay? Sorry. I don't know what to do. I don't know what to say about lithium. I know there's a narrative and it's going to be used in batteries and electric cars and all this stuff. Yeah, that might be true, but I really hope you can appreciate there's honestly not a great deal I can do to this. Here's Hood, Robin Hood. I think we covered this in a live stream, and ultimately it's a strong performing pattern, right? When you get a bottom like this, a range at the top, and then we break from that range, you typically expect very good things to happen to whatever asset it is, whether it's an altcoin or a stock or indeed something completely different. So this isn't a position I've got on. I think this was a example of where we possibly could have had a trade. And as you can see, Hood doing Hood things at the moment. Okay, so not a position that's live. It was a demo from a live stream. But overall, I think this thing will probably continue to do pretty well. And last but not least, natural gas. It is hard for me to say that I could get excited about this chart. I know some people will be saying, yeah, well, what about that breakout? Yeah, that's true. It is a breakout, but is that right here just a bear flag before resumption down? I don't know personally. I think it could go either way. As with Hood, we are building a bottom formation and a range potentially, right? If it was to do something like this, work its way up and then break out in this neighborhood, you know, I think there'd be a thesis for a trade. But for me, hard to be excited about nat gas in its current state. Over in the world of Bitcoin, nice chart here from Crypto El Prez. Textbook, if you ask me. Yeah, absolutely. This is the Dalai Lama pattern, and the Dalai Lama pattern has done exactly what it's supposed to do, right? Right in time for that half cycle low for Bitcoin, that 30-day cycle low. I think this was day 27. And we've had the flush, we've wiped the leverage, we made a bunch of latecomers angry and salty and toxic about it, and now we're about to harm them twice by running this thing back turbo. Unfortunately for them, they'll probably be re-entering short in this neighborhood and on their way to being stopped out. Then I think we go straight to all-time highs and blast through them by the weekend. So overall, Dalai Lama doing what it's supposed to do, right? Especially as it has happened right in time for a half cycle low for Bitcoin. Nice chart here from Willy Woo. We have got in pink the paper Bitcoin. You can see when the pink line goes down, very good things happen to the price of Bitcoin walking forward. When the pink line goes down, very good things happen to the price of Bitcoin walking forward. This, of course, speaks to getting rid of the derivatives and the leverage and focusing on having a spot-driven organic bull market rally. We've got absolutely humongous news here from BlackRock, as BlackRock has filed to purchase spot Bitcoin ETFs for its global allocation fund. So we continue to see this become a thing. We continue to see asset managers want to allocate a portion, whether it is 1, 2, 5 or more % of their funds to Bitcoin. We are slowly seeing the birth of a new standard model portfolio away from the 60-40, which is of course 60% stocks, 40% bonds, towards 60, 39, 1, with that extra 1 being 1% allocation to Bitcoin. If this becomes standardized throughout all asset managers and pension funds, family offices, sovereign wealth funds and alike, then nobody is bullish enough. And from Bitcoin to gold, okay, it's been 20 years since Bob Lucas was this bullish on gold. Of course, it could be another fake out, but he doesn't think so. I don't think so either. We've got many, many pieces aligned here. We've got new all-time highs whilst the strong dollar and the rates are up. Remember, the rates are up for now. But when they start cutting rates, historically, it's very bullish for gold, because when you take away the yield from the bonds, people suddenly have far less of a problem with holding a non-yielding lump of metal. We're also seeing ETF outflows. And if I hop into this next slide here, according to the World Gold Council, the public has actually been a net seller of gold ETFs for 9 consecutive months. So we're nowhere close to FOMO by the public. This is yet to occur. Quite a few people were asking me in the comments what I thought about this, and I said I had no strong opinion. But ETF outflows are actually very bullish, right? This speaks to sentiment being very, very poor. It speaks to people giving up hope for ever seeing a true gold bull market. It speaks to retail saying to themselves, why have I been holding gold this whole time when Bitcoin is up 2, 3, whatever the number is, 400% over the last 12 or so months? Even the stock market just continues to print higher and higher and higher highs. You can see retail is puking out of its position. It has given up hope on gold. And of course, this is actually very bullish. This is very, very bullish because it speaks to having a wall of worry to climb. Markets love to climb a wall of worry. And I don't think it's a coincidence that over the past few years, we have seen central banks acquiring record quantities of gold, right as the chart has worn people down to the point of selling all of their gold and looking for yield in other places. I don't think it's a coincidence that they have worn everyone down right before revealing the true direction of gold. I don't think it's a coincidence that everyone is thinking this rally is going to fail like all the last ones did, right around the time that the central banks have been acquiring record quantities of gold. So as I said, we've got very poor sentiment. That is bullish. We're also very early in the 8-year cycle. There's around 7 more years of this 8-year cycle left to play out. Tells us to keep an open mind about seeing a very bullish bull run for gold. This current cup and handle we're in is 13 years in the making. The longer the base, the higher into space, remember, tells us to keep an open mind about seeing a much, much, much higher price for the precious metals. We're also coming out of a 4-year base on the handle side. Again, tells us to keep an open mind about seeing a nice, sharp rally. And on top of all of that, we have the debt spiral narrative, the mathematical certainty that we will see fiat currency debasement in order to try to service the debt. So overall, I expect I'm going to slowly but surely start to cover the precious metals more and more. And I think for all of these gold bugs out there, they are finally going to get their time to shine. So as I said at the start, okay, purple tie means we pump. Stock market continues to move higher. Now, I'm currently not sweating this move. Even though I got in somewhere in here, I think I added somewhere in here, and then I got out here. And since getting out, you know, we've moved higher. But I'm okay with giving back a few points. I don't mind sitting out of this move. I still have some exposure, as we'll see in a minute. However, this will sting a little bit if we just completely rally up to about 5,500 before finding that weekly cycle low. But for now, I'm not going to go chasing this. I'm going to stick with my guns. I still think we are due a left translated daily cycle and a rollover into that daily and weekly cycle. So unless this becomes invalidated by just continuing to rocket higher, then I would think overall I'm only going to end up giving back a few points here, and then we're probably going to roll over into that cycle low and go. So long as that happens, I won't mind too much. Of course, it will sting slightly if we run straight to 5,500 plus, but I honestly don't think that's likely at the moment. The same is true of the NASDAQ, right? We got out here after getting in here. Pretty nice trade, but so far it's been an early exit for me. If this thing again breaks down into a weekly cycle low in the not too distant future, I won't mind at all. However, there's always a chance that this thing is going to continue to run, in which case we'll deal with that as it comes, right? For now though, still pushing this Dow Jones long, as you can see. Haven't yet set a new lower low, so still in this trade, still pushing it to see if it can recover. It's got this sort of trend line, this one right here. So maybe it could break above there and we can readjust the trend line, the red one in support to encompass this wick. Or maybe this is breakdown retest looking for that resumption, and that will give us a hint of what's to come in the S&P and the NASDAQ. Breadth continues to widen. Russell 2K, as you can see, blasting off of here. This looks a lot like a Wyckoff accumulation followed by a sign of strength at the hard right edge, and we're about to enter phase E markup campaign. So I like what I see here, like the breadth is widening. That is good to see. Gold, as we were saying earlier on, you know, we are on our way, right? Long and strong new bull market. We have got a daily cycle low due next week-ish. So looking for a little bit of a pullback, but I think that pullback is for buying the dip. All of this being fueled by a DXY that is breaking down into its 3-year cycle low. I'm happy to see this because I have to admit I was starting to get a little bit concerned that we had potentially confirmed an early one back here. Seems that we have not as it stands. Seems like we have got indeed that deviation into the CPI and now looking to roll over and make that 3-year cycle low. So I like what I see out of the Dixie. That should of course fuel gold and Bitcoin higher. Bitcoin completing that Dalai Lama pattern. This is of course right in the middle, roughly. This is right in the timing window to see a half cycle low shakeout. So all of this makes perfect sense. I think given that we've got this right in the middle and this one right here is right in the 15-day timing window, that tells me this count is correct. And you can see I've now removed the earlier count that we had from back here and back here. I've also moved this daily and weekly cycle low marker higher up, because I think what happens from here is we eventually break this high, we run right to 80 or even 90k, and then have a nasty shakeout into that daily and weekly cycle low for Bitcoin. So as ever, one day at a time. I think if we do get this play out, I will be interested in taking some off at around 80 or 90k and then looking to reallocate at the daily and weekly cycle low for that final leg higher into what I believe will be an early left translated cycle top. So we'll keep taking this thing one day at a time. I don't want to get too far ahead of myself. For now, let's see if we can actually crack this all-time high this weekend and start a run higher. And I'm also quite confident, as you can see, because I've removed the other daily cycle question mark count, that this indeed is the correct count. And I say that based on the fact that we have a nice 15-day quarter cycle low, a nice 30-day half cycle low, and thus we're probably looking for a nice 60-day cycle low right around the first week of April. We'll cover the crypto-related stocks quickly because I know a bunch of people sweat whilst they hold these, right? I know these are quite difficult to be part of. So, all the while we're above the blue line for Coinbase, we'll keep pushing along. MicroStrategy, all the while we're above the blue line, we will keep pushing along. Now, is this a top coming in? Are we about to break down? Maybe. But, like I said, all the while we're above, we'll keep pushing. Raya, if I zoom in, you can see by the skin on this camel's teeth, we are not stopped out yet. So, we'll keep pushing and we'll see what can come from this. If I get stopped out, then we get stopped out, and that's fine, because the market will have just proven me wrong. It will tell me not to waste my time, energy, or capital on an underperforming, relatively weak miner, and I can focus on one of these other ones that is exhibiting much higher performance. Marathon, still looking to add a position, but probably going to end up playing patient. I would think we either come swinging out of here into that 60-day cycle low and go, or perhaps we're going to continue to chop around, maybe do something like this into that 60-day cycle low. Either way, I will be looking to add if we can get a nice setup, but for now I want to continue to play patient. If I zoom out a little bit, we have got that bottom formation, the range break, and we're still above that, okay? So it tells me to keep an open mind about seeing higher prices walking forward. So please do make sure you come back tomorrow for the deep dive. Next week is CPI. Going to be really, really interesting to find out whether or not we've got deflation or whether CPI is going to be sticky. I know a lot of people get quite triggered when I use the word deflation, okay? A lot of people say, yeah, well, they're going to print. This time's different, and they can print, and it's going to prop everything up, and we get instant inflation. But understand this. There's a difference between inflation and debasement, okay? There's a massive difference. Debasement happens nearly instantly. Debasement is, of course, caused by increasing the supply in currency. However, this is completely different from inflation. Inflation requires a second component. Inflation requires velocity. Velocity refers to the amount of times the money changes hands. You don't have any velocity if the money doesn't change hands. If they just print money and don't do anything with it, right, or they only make one transaction, then that money has a velocity of 1. If all they do is print money and buy the S&P 500, there's no velocity, and thus we won't see the inflation. That money has to change hands a bunch of time. It has to increase in velocity for us to actually see inflation. So I know people are saying, yeah, well, Camel, you're not going to get deflation because they're going to print and everything's going to go up. Yeah, asset price inflation, maybe. But when you print money, it needs velocity. The money has to change hands, and that is why it always takes about 12 to 18 months on average to actually show up in the CPI print, okay? So even if they print today, even if they print 20 trillion today, we're not going to see that show up in the CPI for 12 to 18 months, okay? It needs to work its way through the system. So deflation is very much still on the cards, whether you like it or not. Of course, I am open, as always, to completely scrapping this hypothesis if we get to the CPI print and it comes in at 3.7 or something like that, okay? But for now, let's wait. Let's see the CPI print, and we'll take it one day at a time, as always. Before I go, I want to say, please head over to Creative Precious Metals channel, show him some love. I'm going to be having a drink with him and the Mighty Cobra Stacker tomorrow, and that's going to be going live on CPM's channel on Sunday at around 2 p.m. GMT. So look out for that. Again, please head over to Cobra's channel, show him some love. As I said, it's going to be coming out on CPM's channel. By the way, if you head over there, CPM is very generously running a 500 sub giveaway where you can enter a competition to win some Bitcoin. So it was originally £100. I think it's now doubled to £200. So if you want to win a little bit of Bitcoin, head over there, help CPM reach 500 subs. And of course, the odds are pretty good at winning. 1 in 500 is not too shabby. So other than that, make sure you tune in tomorrow for the deep dive. Make sure if you're a member, you check out the members only video. For everyone else, I hope you're doing well in life. God bless. Have a fantastic weekend. And until next time, take care from me. All the best. Cheers. Bye.